What I like to do is just welcome everyone from the Crypto Coffee Club. This is our monthly workshop, and this is our 7th one of the year. So we're keeping consistent with one a month, and hopefully we'll be doing a lot more. The frequency will be probably a couple a month, but I'm really excited, because we have a special guest on this workshop, and it's the first time we've had an external expert or leader join us, and there's a good reason for it, because what I wanted to do was talk about a subject as part of the ecosystem that I think is going to impact so many people, and it's best that we get a heads up first, just to understand it a bit more. But I wanted to bring someone who's living, breathing it, created a business around it, and is doing some great things in the marketplace. And it's my pleasure to welcome Mrs. Carmelle Cadet to the call, to the workshop. And just want to introduce you. Carmelle is the founder and CEO of EMTECH, and what I'd like to do is maybe, Carmelle, just talk a bit about what your background and what your company does, and then we'll jump into it with a bit of back and forth between me and you.
Yeah, that sounds good. So thank you for having me, and honored to be the first external guest as you guys engage. And I personally love the small forums, because it shows that people are engaged, people are interested, and really people are willing to learn. So as Christopher said, I am the founder and CEO of EMTECH. EMTECH is a technology company building what we call the modern central banking infrastructure. And a simple way to understand is that central banks are very important financial institutions, but they have very old technology. So we have taken upon ourselves to realize the opportunity, but also the importance of central banking in our lives, and we can talk more about that, and build new generation of software that ensures that financial markets and financial ecosystems can be more inclusive by design, and also more resilient for the future. Because when you think about access to finance and access to financial services, as we go more digital, there is absolutely a fear or risk of leaving people behind. And we know how important that is. So we were building better technology to make sure that does not happen. So a bit of background about myself. I was originally from Haiti, born and raised in the Caribbean, moved to the US and been there for about 20-something years now. Built a career at IBM, so I went into enterprise IT. While financial inclusion has always been for me a kind of a North Star of a problem to solve, just because I moved from a very underdeveloped financial market to a very developed financial market in the US, and I got the appreciation for how important that was. So I always said I wanted to go back, and it was important to build better financial markets around the world. So I get to live that today. I'm very fortunate. So after leaving IBM, I decided to launch EMTECH, and it's been 3 years. We're celebrating our 3rd year anniversary this month, and we are focusing on building digital regulation platform for central banks, as well as the topic du jour, which is central bank digital currency. We see that as an amazing opportunity to digitize cash instead of printing paper cash, and to provide people and use blockchain technology and DLT to give people better access to finance. So I'll pause here.
Okay, fantastic. Thank you for that, Carmelle. And it's always interesting to get to know someone's background and the reasons why they started something. Because when I first noticed you and your company, it was about a year ago. And I used to work with on the stock exchange, and I got exposed to blockchain technology about 2015, 2016. Okay. And because the group at the time were looking to utilize the technology into our processes, especially in settlements and everything with the blockchain technology. But at the time, the technology wasn't mature enough, and everyone was talking about Bitcoin. And then we invited Ethereum, IBM, R3 Corda into the group to do a talk about it. And it was kind of, it dawned on me how important this technology is going to be, disruptive it's going to be, but I didn't know what shape or form. So, you know, I just want to ask you a question, Carmelle. When it comes down to working for a big corporation like IBM, and going along that journey, what really intrigued you about blockchain, and how come you didn't probably work with this concept with IBM instead of going out alone?
Sure. So IBM, before IBM got into blockchain, I had a light bulb moment around the technology itself, because my journey in trying to think through financial inclusion, looking at M-Pesa, looking at emerging markets, and so on around that time, it was still for me a big wall to break down when it comes to giving people who don't have a lot of money access to better financial services. Because then there's a saying, at least in the US, that say, you know, being poor is expensive. And a lot of time it's because of how expensive payments are. It is also the fact that when you are underbanked or unbanked, many times you're either cash based, or you have to have another third party that's going to say, yes, I'll take your check and cash it for you, or I'll take your paper cash and let you buy something with it. Or in emerging markets, you have to be banked. Before M-Pesa, before Momo Money, it's either you were cash or you were banked, right? And the US is very similar, where you have a more a higher level, a higher percentage of people who have access to digital finance. But those are the two choices. And for Haiti, kind of going up for me, the concept of giving people who don't have a lot of money bank accounts is why you still have 2 billion people who are still underbanked. The banking financial model does not make it attractive for them to go get low income, maybe high volume, especially high transactions, kind of spending money every day, living paycheck to paycheck. The banking system does not find those clients attractive. Blockchain does not care. Blockchain was a way to use technology and in a way that does not care where the person is from, what color they are, how much money they have, to give them a digital wallet, right, to get access to financial services. And that's what, for me, got pretty exciting. And then the second moment was when you realize that most unbanked people are using paper cash. And you look at something, COVID was after, but when you look at people using paper cash, the central bank spends millions and billions of dollars printing paper cash around the world, and we're moving into a digital world. Why don't we help central banks use blockchain technology to digitize cash and give everybody a digital wallet where they can keep their digital cash and use it in a way that's very efficient, scalable? You can order Amazon, you can order online, you can do e-commerce, you can transfer peer-to-peer, you can transfer cross-border eventually. That's what Bitcoin got right? So the application of blockchain through Bitcoin really showcased the capability. So interestingly enough, I did not hear about Bitcoin first. I heard about blockchain first, which I think is something different when you kind of hear how people get into this space. So I fell in love with the technology first, and then Bitcoin for me was a clear outcome or a show and tell of how the technology could work.
Well, that's fantastic, and you really covered a lot of areas regarding the reason why people are unbanked, why financial inclusion is so important as well. Because when I traveled to Brazil about 20 years ago, and I think they just had a new president, President Lula, and he came in and he did something that no other president did to increase the living standards of millions and millions of people that historically were excluded from the banking system. Yeah, and he did it through political policy and all those different things. But I see the same thing happening now with blockchain technology, just having a mobile phone and having a wallet, yes, where you can receive money and spend. And that's where everything is going to go. And that's where I think the mass adoption is going to be anyway, with this technology and people being able to have access to finances. The flip side to it, though, based on my research when it comes to CBDCs, is that the central bank is going to have more of a transparent viewpoint on the economy if they know that they've created this money, distributed the digital money to the wallets, but they know who's buying, who's transacting in the wider scale of the economy. So they can get metrics and all these things. But don't you think there's a shift from them not knowing, just printing money and saving billions of dollars, to having a more of a visibility on the population and the economy?
I think it's a great question. A lot of people are looking at central bank digital currency, and we're assuming that everyone who joined us knows what central bank digital currencies are, but the concept of a central bank issuing their own version of a digital currency, not Bitcoin, not crypto per se, and central banks don't like to think of themselves kind of doing that, but using the same technology in a different way. They already have the mandate today legally to print cash. And the difference is that now they're going to use a different technology that we happen to fall in love because of the transparency that it shows, because of how immutable the ledger is, because of how open and distributed the recording of information is. That's what really creates a lot of congestion in the system today when you think about how information is shared. The fact that everybody has their own ledger, but our lives, right? We go from one store to the other, and we don't really care how they go about settling the transactions. We just want to swipe a card. We just want to get what we're getting and leaving. But there is a very complicated system in the back end because it is siloed. And what blockchain brought on board, yes, on one side, it makes the transparency great, but when a central bank uses it, it can, yes, absolutely do the same thing. It creates a better visibility into what is going on. However, there are levels to privacy, right? There are levels to visibility of data. And one of the things that's very difficult when you think about privacy is, who wants privacy from what and when? Because you would not mind if the government knew that you paid your taxes, because you want them to know that you paid your taxes.
That's right.
But you do not want them to know that you're buying ice cream, right? Or that you're sending money to somebody else. And it's really about thinking about what do we want as people? And there's more conversation around giving people more power around what is shared on them. So privacy and control of data is something that's important, especially in CBDC or in crypto in general. But there is also the concept of, if you're into Bitcoin, you're already kind of comfortable having your wallet being public, right? So there is a concept that you're already embracing a level of transparency that the government can go and look at your wallet already, or the central bank. And I'm sensitive because the central bank is different from the government, but the central bank, if they wanted to look at your Bitcoin wallet, they can, and they do today when there's investigation or AML and so on. But the central bank does not have a mandate. We have not met a central bank that says, I want to know that this person bought ice cream today. There are real people, they're buying ice cream too when they leave the central bank. Right. And then when they leave the office, they're going out and going grocery shopping as well. Those are real people who are living every day. Instead, what we see across the board is one, the central banks already have a lot of data because they regulate the financial system. So banks and exchanges, and you know this, you have so much compliance requirement and sharing of data that is expected of you by your regulator. It's already shared, and the central bank has a lot of visibility. However, it's more for market performance. Sometimes the data is very late. Sometimes the data is not trusted. Sometimes the data is not easily reconcilable, but they need data to do macroeconomics. How high do they raise the interest rate, and, where the market is and how much money they should put in the economy versus, what is a target inflation or employment rate. You need data to do that accurately. And some of the things that we see is the fact that the central banks don't have good enough data to do a better job at trying to control inflation that we're all dealing with today. So you could kind of make the case of, well, I don't want the central bank seeing my information. But there are different levels of privacy on how to hide and how to provide a bit of confidentiality on your information, meaning your wallet number is not your name, right? Wow. So it's a proxy to who you are, but it doesn't match your government number, your ID number. You kind of have to have more information, more digging before you go and recognize that this wallet belongs to Christopher. And different users and different technology providers, including us, we're designing and thinking about how do you provide, even in a public ledger, how do you provide the central bank with privacy? Because that's a concept as well, is, do you want all the money supply of a country to be on a wallet for everybody to know? For your enemies, national security becomes an issue, and so on. But also, how do you provide the users of the systems a bit more confidentiality and control over what is shared and what is seen?
Yeah, I mean, that's a really good answer. And it just brings up some more questions for me as well. Sure. Just let everyone know, we have an hour, a bit less actually because of the time constraints. So we'll do a Q&A towards the end. So if you want to write down your questions, probably quarter two, we'll open it up to the floor. But I've got some of the things you just said. Just really got me thinking now, because we got KYC, know your customer, and AML, anti-money laundering rules. Or regulation in different jurisdictions. Now, I'm a big fan of decentralization. I think decentralization will win, because when we go into Web3, the guy that owns Twitter is talking about Web5, yeah, but let's deal with Web3 now. So the users is going to be, the way Web3, where I see it, is that we are going to have more control over our data. So we will only allow these centralized corporations, like obviously central bank or Facebook or Google, limited access to our data. Is that right? In the sense that, so we have more control in what they can see, what they can use, and what can be monetized. And we could probably monetize our own data if we wanted to. Yeah. So that's what Web3 is to me. So when it comes down to blockchain technology, because Crypto Coffee Club is all about sharing blockchain, crypto information, education, experiences, and topics within digital assets. Where I'm getting to with this, Carmelle, is that what we're looking to do is, as individuals here, is to have more trust when it comes down to governmental organizations. And how is that trust going to be developed, earned by the central banks and the governmental organizations?
It's a really good question. I mean, I have conversations with current central bankers and, more importantly, former central bankers. A very now dear friend of mine who left the central bank, and, having a conversation with her, it was very telling when she said, I realize now that central banks need better PR, because it's a concept around it's not easy to be a central bank. And those are very hard decisions. I don't know if you ever thought about it as far as like, how do you impact inflation on, the price of a good at the store? But you absolutely right. There's a lack of trust given that communication is something that it's not something that we think about every day. It's very complicated, high economics aspect of life that everybody just loves to defer to somebody else. They don't want to figure out what is the optimal level of employment of their country. They're trying to keep their own employment. There's somebody else to need to figure that out. What ends up as far as the trust breaking is the fact that you have very private institutions. The reputation is a black box sometimes. Regulators don't communicate very well on why they do certain things. And there's just a growing culture over time that made the institution very, very conservative and very private. However, I think if you look at this space when it comes to CBDC, a lot of people actually think it's fascinating on how public and engaging central banks are right now. They are at events, they are talking, they are participating in panels, they are participating in panels with vendors, with competitors, and so on, and with other central banks as well. And the BIS, for example, is playing kind of an innovation hub for a central bank. So you're having and I know people who come from the private sector that are going into central banking, which I think is fascinating, by the way. But you need the other side, because the new generation of central bankers, I think, understand innovation, understand technology, understand the private sector a bit. So there's a bit of that happening in the central banks that we're seeing. But you're going to see, at least an approach, especially when it comes to CBDC, there's a bit of a hook there when it comes to the trust factor. Because if a central bank wants to be successful and they see CBDC as a way to provide financial inclusion, to get more people, off the black market into normal markets and give them access, that means that every time they do a policy, it can probably be more effective versus it reaching 50% of the population versus 80, right? Because sometimes the goal is not the bad thing. Sometimes it doesn't end up what they wanted it to be because the system is not as efficient as they want it to be, right? So then you look at the central bank and say, if you want to be successful, you really want the CBDC to be adopted. You really want people to use it, right? If you're going to spend all this money and monetize and digitize your whole infrastructure, and people are not going to use it, and that's something that I'm on the record saying across the board, and I tell this to central banks and I say it publicly. People are not going, if people don't trust your CBDC, they're not going to use it. It's really that simple. And now the question is, what do you do as a central bank to foster trust? And I think that's your question, right? Yeah. Part of it is communication, because from a mandate perspective, the central bank wants to drive certain things that we all care about: financial inclusion, lower cost of payments, efficient and competitive payment ecosystem, competitive banking systems. It doesn't always seem that way, but that's why you have multiple banks to shop around, right? Before that, you could have just a monopoly of one bank that just tells you where they're going to pay you 0 interest rate and charge you 16% on a loan. I mean, without regulation, this is kind of what the alternative world could happen. We take those things for granted, that you have a regulator that says you can't do that. Not only that you can't do that, but you need more players and give people access to more banking system in order for them to be competitive, and you get into a private sector competition. That communication is not always done. It shouldn't take me, right, to explain to people is like how good a central bank and how good a central bank is into our lives. But that itself needs to be, I think you see more engagement. I think you see a deliberate approach to select and think about how you in establishing CBDC. And central banks, last point I'll make, is that they don't have the mandate they don't want to see that much data, because it also opens a risk for them, right?
Okay.
And they're not in the private financial market. They're not interested in replacing the banks, right? What they're dealing with right now are the banks are becoming fintech. There's more tech in the ecosystem now. What does AI mean? What does cryptocurrency? What does algorithmic, stable coins mean? Those are the things that they're trying to figure out. What does that mean for finance? Could this destabilize the economy? But not how do we put the banks out of business and replace it and go directly to the consumer to see all their data.
Yeah, I agree. Obviously you're making a good point for the central banks in a positive way, and you're saying a lot of things that is counter to what you see on YouTube. And I've seen those videos, and I mean,
the team tells me I should do a YouTube channel to talk about this stuff because it's not often that you kind of talk about central banking, right? The concept of that.
That's true. I mean, you can make it appealing and a bit more sexy, as they say here, so that people, so that people can. Because I've done this workshop because within the club, within the group, we've touched different topics, but like I said to you before in the prelude, Accenture were hiring for people to be part of the consultancy for the CBDCs, and that's when I first heard about it, and that was about a year and a bit ago, and I thought, wow, this initiative is absolutely fantastic. So I just want to touch on one topic on CBDCs. Let me go to the next line of questions. But there's wholesale and there's retail. Okay, so I see a big argument and a big plus for for wholesale because of the efficiencies. It's just the retail I wasn't too sure about, and I think, do you think wholesale is going to come before retail on the CBDCs?
I'm going to blow your mind. I think eventually we're going to move away from those two concepts.
Seriously?
And I think so. And here's my hypothesis. If you'll correct me if I'm wrong, the concept of wholesale and retail right now, the way central banks think about it, is that you have a large payment system versus a small payment system, right? That's the main differentiator between the two systems. It's like you can use ACH and switches and card networks for up to a certain amount. And then after a certain amount, you couldn't use your card for $1 million, €1 million, for example, or £1 million, for example, right? You would have to go to the bank. You would have to do something else to go and settle £1 million transactions. Same thing for cross-border payments and so on. There's a reason why you can't go to your portal, even if you work at a corporate, and pay $250,000 unless you have a special relationship with a special bank and so on. Because there are large payment systems and there are small payment systems, and there are different ecosystem players that play in that. So that's the retail for the small one. And in the wholesale, there's a subset of those banks, the large banks that are allowed to get Fed accounts or central bank accounts in order for them to do wholesale. That I'm oversimplifying a bit, but that's the big picture on how wholesale and retail works. So now you have two different systems that are settling transactions because they're big and small, but eventually they have to reconcile because the transactions that run through faster through the ACH system and the national switch systems still have to make their way through and settle at the wholesale system once a day or twice a day. And if you move forward and kind of look ahead, if you are a central bank and you have a distributed ledger that does not limit whether a transaction or a wallet can maintain a certain amount, why would you have two different systems?
Okay.
You could actually structure wholesale and retail on the same ledger, and you allow banks and fintechs to do different things. And it's all structured at the wallet level versus creating a barrier for small and large amounts. So that's my hypothesis. But to answer your question, Wholesale was the beginning. And when you saw CBDC being tested in the early days, wholesale was the use case, the large transactions, bond settlement, security settlement. Those are large amounts, and they take about 2 days to settle, to move across banks. And it's a mess, right? It's a lot of money. It's a mess. You have to make sure you have liquidity on both sides and so on. But it is only for the banks, meaning that an individual person does not usually have a wholesale account at the central bank, right? So it's all financial institution talking to themselves. And what we saw, I think, at least what I read through all the papers and all the projects that I've kind of delved into as I was getting into this space, is that there wasn't enough pain points for the banks to transform. There were not as many. The bank would tell you it's working, why fix it, right? Yes, it's 2 days, but somebody's making money on the liquidity, on the float. It's all good. We don't need this. And that's why I think you never particularly saw any prospect. Yes, the technology was new, but the motivation to go wholesale has not held up. And then fast forward to COVID, I think that's where the big shift happened. First, it was Libra, Facebook currency. And then you have the concept of, digitizing cash or digital payments during COVID really taking over, where it was mostly people who were suffering, not banks who were suffering to get payments and get money. The banks made very well when it comes to providing payments distribution, at least in the US. All the major banks got paid by the government to distribute stimulus money. And you had millions of dollars that were lost in checks that were, went to the waste. People who did not have a bank account had to wait the longest. If you were an unbanked person, you probably waited the longest to get a stimulus check, because the banking system made the distribution to the banking players. And if you did not have, you had to wait for the IRS or the tax people, the tax agency to say, here's a website, come tell us where you are and we'll send you a check. When you got the check, there was no bank open for you to go cash it.
Yeah.
Right? So yes, you're unbanked, you need the money the most, and you end up suffering the most. So that's where you saw the retail. There's a clear use case, a clear pain point with billions of users waiting for a better option. And for me, that's what got me excited on the retail side. But knowing that there are more than just retail transactions that run through the system. There are a lot of, securities and trade agreements that get settled, where you're going to have large transactions. But I think if we really want to tap into the efficiency of distributed ledgers really offers an interesting play to have everyone connect and have an integrated backend that can be controlled and structured and have business rules and access limitations at the wallet level and at the entity level.
Wow. I mean, that's a lot to think about. I mean, to be honest, Carmelle, I did some slides. I don't know, I sent it to you. Just to prep everyone on about it, just so they can have some questions and so forth. And but I wanted to get onto that distributed ledger technology, guys. That I know about distributed ledger technology, because what you're looking at, instead of having one database, you're looking at a distributed database across different entities, different workflows, different organizations, different companies, where they can share a ledger of transactions, okay, or workflows. Now, with EMTECH, I know, because I did a little bit digging, I know that EMTECH is really close with Hedera in the sense of technology. And I like to explore that because when I looked at Hedera a few years ago, I got so excited, because Hedera's consensus system and the way they have gone like a proxy of enterprise to blockchain, and they kind of merge all that together. there's so much you can do with it. So, I mean, could you just let everyone know a bit more about the technology that's running your company?
Sure. So we decided to partner with Hedera after really looking at the different protocols out there. And I had the luxury and the privilege to be part of IBM blockchain when Hyperledger was developing, Hyperledger Fabric was developing at the time, understanding the plus and minuses of it. Hyperledger was amazing in certain use cases. I mean, I remember when I worked on a deal with IBM and Walmart on food traceability. So how to see, where food come from within seconds instead of weeks, and on trade traceability as well, as far as containers being tracked all over the world and having better provenance visibility on blockchain to do that. So those are use cases that I was really privy to. And then the last one we tried, so we started getting into other protocols. So we started working with Stellar when I was at IBM. Really liked the protocol for, exchange, or at least issuance and exchange mechanism, but it's not something that was built for CBDC, if you will, right? It's just an issuance and exchange mechanism, and everyone kind of get to tap into that. But you could build your platform on top of it. So that's one. Bitcoin is limited on how you can build on that. That just became really evident around the time. And then Ethereum, we started building on Ethereum, but realized that the limitations around the fees and the time to processing and the dependency on the community when it comes to upgrading and bringing more changes to the consensus, it was going to be a problem. But, everything has a trade-off. And for us, we took some time and wanted to understand how Hedera was really forming up, because Hedera, a group of veterans, but the protocol was still building at the time, not too long after, we started. We wanted to see how it was going to pan out. But as you mentioned, you put your finger on it, the combination and the focus on enterprise DLT and having the confidence and the innovation and the framework to say, this is probably not a typical blockchain, but we can enable distributed ledger technology, tokenization, a trusted factor, and then we platform or standardize how the protocol is maintained, governed, and grown, right? And built over time. They turn it over to the Hedera Council as an independent body that's going to continue to run. And what they did, I think, very well in that process is to bring on board major companies that when I walk into a central bank and say, if you trust IBM to run your cloud, to run your security, IBM is part of the group that's maintaining the nodes for Hedera. So it's a different way of thinking about cloud or maintenance or infrastructure maintenance that they don't have to worry about. And then we build a platform on top of Hedera to give a unique user experience, a product that is built for the target that we're building for, which are central banks. So you can imagine the functionalities, the features, the user interface that you would have for a central bank would be different from what you would have for an e-commerce platform. Right? And building, those are two very different businesses, kind of thinking about treasury operations versus buy now, pay later, that kind of stuff. It's a different interaction. And that's what we did. So we went out and built a platform using a DLT mechanism that we thought was scalable enough. And sure enough, it is the platform that has the most most transactions on a ProdNet compared to any other protocol. And the idea for us to talk about also energy efficiency when it comes to going digital. For me, that's something that we're going to talk more and more about because, we're in a financial inclusion and blockchain, DLT. elevating the conversation and talking about to the next stage. Especially for emerging market, but for developing markets as well, we should think about the impact on our energy infrastructure or power infrastructure when we're thinking about deploying something like CBDC. It's one of the biggest selection or decision that a central bank is going to make over the next 20 to 50 years. And that's going to have an impact on the next generations. And picking something that's energy efficient, we think is very important as well. So Hedera made sense for us. I have to say, we're protocol agnostic, but what we tell central banks is that we think we found one of the best protocols out there. It is a public ledger. It allows for privacy mechanism. You don't need a private blockchain to do everything you need to do. So used to be the early days of blockchain, thinking you need everything to be permission and private. That's not the case. You can provide high scalability, high level of interoperability, trust, and also knowing that you have trusted companies providing that common, call it the internet of ledger, if you will, kind of an open ledger that anybody can start building on.
Wow, that's fantastic.
Chris, can I ask a question?
Yeah. One second, because we've got a limited time, so I'm going to open the floor to everybody in a minute. But what I like to do is, there's another topic about tokenization. So if I go into tokenization, it's going to be quite a long draw, I think. So what I like to do is hopefully maybe book another time with you as a one-to-one, Carmelle, in the future, just so we can talk about that, because I've got some real really good questions for you on that topic. But
Okay.
but what I do, who was that opened the mic? Who was that?
Hi, it was me, Bobby.
Yeah. So what I'll do, I'm going to open the floor now. We've got about 15 minutes, just under 15 minutes. So I'm going to let the audience ask you some questions, and Bobby's going to be the first one to ask you the question.
Hi, Carmelle. Thank you for your information. It sounds really great. I just wanted to ask you, what part of your protocol or infrastructure is blockchain, and what part of it is what Hedera is using? Because if I understand it, Hedera are hash graph and not a blockchain. So what part are you actually using?
So in the family of blockchain, we talk about, sometimes it's anonymous, or the mechanism on how the blocks close have been traditionally on how you think of a typical and true form of blockchain. The concept of tokenization and being able to deploy a distributed ledger technology where tokens can run and execute transactions for us is what we looked at as a very interesting mechanism that does the same thing that a typical blockchain protocol would do. Instead, it is the method with which they provide consensus. And what that means for everybody is, when a transaction is agreed upon by all the nodes and recorded on the ledger, when it becomes final, how do you do that? Typical blockchain, whether it's Hyperledger or other protocols, have had, having so many transactions in a block, and then close the block, and every block that closes creates a new block, and you have that kind of chain, which is called blockchain, right? Kind of like that traceability, and you cannot change the transaction from the previous block. Versus Hedera hash graph, instead of the block mechanism, they use a hash graph mechanism, which is essentially connecting a bunch of nodes that talk to each other. And every time a transaction is getting executed, they have what they call the gossip protocol that really tells all the nodes that the transaction has been registered and is cleared. And then that's how it gets recorded on the ledger. So it is very technical at a granular level, but you get so much more performance compared to a typical blockchain and how it closes and how it records. So Hedera has been able to reach 10,000 transactions per second. And that is not possible, at least from what we know and what we looked at, on most other blockchains on an apples to apples comparison, right? So a bit of trade-off, whether you say, okay, this is not a typical blockchain, but it meets all the requirements, the immutability, the ledger mechanism, the node management, the hash graph, the visibility, the immutability of the ledger as well, but with a lot of benefits around performance and energy efficiency as well. Back to that. So no mining, there's no mining per se on Hedera. It's really, being able to issue tokens and with codes instead of actual mining.
Thank you. That's great. No, that's great, because I am very familiar with Hedera. I'm slightly working on a project with them in regards to remittance in Zimbabwe and Africa. So I'm used to I know what the council do.
I've been trying to find the Africa-based age barbarians. I would love to connect at some point, because the connection there, I'm a big believer in having grassroots community when it comes to educating and enabling. We fell in love with the protocol. We like the protocol, but it's actually very important for people to start building around in the countries that we work. That's what's going to make it very interesting. By the way, full disclosure, we don't hold any age bar. I'm not saying that because we want age bar to go up. We're not a holder. Protocol itself we think is very sustainable, and we like the team.
Yeah, and it does have the fast transaction speeds, as you do say in the protocol, which is why we're looking at using HBAR, because the blockchain technology just isn't fast enough unless you're going to make it more centralized, and that's what makes it faster. So I do understand it. I understand where you're using the difference in using hash graph, but saying blockchain just to make the ease of use of wording so people understand it. So I get that.
Correct. It's so low on what the difference is. Most people, and to be fair, even the Hedera team, right? DLT and blockchain are used interchangeably all the time.
Fantastic. I'll definitely get Bobby and you to connect. Yeah. Okay, fantastic. So any more questions from the guys? Anything you'd like to ask, Carmelle? We've only got 7 minutes.
I'll post this on Twitter. They'll be happy to know that we were talking about Hedera today.
Yeah, that'd be fantastic. Okay, I wanted to ask another question. In a sense, when it comes down to education and creating a platform for people to really embrace this whole new world of digital assets, and because, okay, we're going through a situation in the UK where we've got rid of our Prime Minister. Okay, Boris, he's gone. Yeah, and so we've got an individual that went publicly on the internet. His name is Rishi Sunak. He used to be the Chancellor of the Exchequer, and he was becoming the Prime Minister. And he went and said that the G7, they are pushing for CBDCs. They are pushing for it, and they very much are trying to advertise it, promote it. Okay, and if he becomes Prime Minister, he's going to really push that. But what I want to do is with Crypto Coffee Club is to enable education to be accessible for everybody. And my vision is to probably work with organizations like yourself or Hedera or Super Oracle, this new one that's coming out, and so forth. Where do you see within EMTECH and your vision of because you're very famous in LinkedIn, but where do you want to go? How far is the vision, when it comes to it?
So let me answer it this way. What got me into this is a very simple concept of we have an opportunity to reimagine what financial markets can be like, especially people like us who know enough about the technology and have an appreciation for how transformational it is. It's like you can't get that out of your head, right? So if you start there, it's like now you're trying to figure out how can you actually impact the world with it. but you also have an appreciation that you are at a time that is like no other. And other people have talked about that, whether it's the internet and everything else, but you are at a time where also the ecosystem is changing. So it's not just technology that just emerged. It's just people want more. There's demand, and there's an opportunity for me to deliver on my vision and my passion, which is giving people access to financial services, regardless of where they live and where they're from and what color of their skin they're in. And when we think about EMTECH, we started with a focus on Africa, Caribbean, and the US, partly because we understand those markets and they are on the cusp of transforming as well and reinventing themselves. I'll give you an example. If you think about Ghana, Ghana is free, just celebrated their independence, 65th anniversary of their independence. And they were the first to become free on the continent. So everyone else, right, has a younger economy, if you will. And some of countries still don't have control over their financial market.
It's true.
And that this is about sovereignty, if you think about it, right? There's a reason why UK is a hub. There's a reason why everyone, doesn't matter of the size of UK, you kind of have to respect UK because it is the financial hub of, in Europe. When Brexit happened, it was a big deal. I remember staying up, watching Brexit happening, not because of the size of UK, but because UK, every single big corporation has money parked in UK, has financial relationships in UK, and so on. So financial markets are critically important in how you govern and how you think about your future as a country. And central banks are now at a time where they have the opportunity to do that. So we have a focus on Africa and the Caribbean and the US. However, if you call me Christopher and say you are talking to Richie and you want EMTECH to come talk to Richie, I'll fly up. I promise.
Okay, maybe I can arrange that. You can come over and educate Rishi on what you're doing. That'd be fantastic. But yeah, thank you for that. I know,
but that's a big mandate for us. The concept of and I know today we're talking about CBDC, but as we went to talk about CBDC, one thing we discovered, it's not just CBDC that's happening. There's something bigger happening right now. Because technology itself, people will tell you technology is not the problem when it comes to innovation or solving problems. There's sometimes technology is there, but the regulatory aspect of things have killed a lot of innovation, have made it difficult for things to happen. When you think about cross-border payment across Europe versus across Africa or versus across the US, those are three different mechanisms. Africa has a very tough time getting currencies to settle. They all have different currencies and settlement and conversion is really hard. Europe came up with a single currency which provided interoperability, right? But it needed to put a regulatory framework, very painful process, but it needed a regulatory and legal framework to make that hold. The US is very different, where you have 50 states. And if you want to do business in all 50 states, you literally have to go across all 50 states and get regulatory license. Flutterwave, for example, I know, for some of you who know Flutterwave, African-based fintech, you see fines because a user, lives in California, and California says you can make cross-border payment, but Texas said, no, you can't do cross-border payment. So here you are, you travel and go see your family in Texas, and somebody texts you from Nigeria and says, send me money now. You're sitting in Texas and you're sending the money in Flutterwave. Flutterwave is getting fined because a user used the financial services outside of the state that they were regulated for. It's very complicated, and what we're hoping to solve as well. Central banks are also at the center of that.
Yeah. And
modernizing regulatory environments, as well as enabling a transformation of digitizing cash with blockchain and DLT. For us, this is a unique combination that we think can unlock trillions of value across emerging markets.
Wow. Wow. That's absolutely amazing. And the way you just articulated that really set some light bulbs in my head. Exactly, because of the cross-border payments, you know, a lot of them are settling in the US anyway. If you're doing trade from India or to Asia to Africa, they have to settle in America, and the banks in America get most of the money. So, and also we've got Euro. We can have a single currency for Africa as well. But that's another topic.
Correct. Yeah. another day we'll talk about that.
Okay, we're on top of that. There's a question in the chat. Liberia just celebrated their 175th Independence Day. However, the economy and government is very, very young. Is the best way to put it. Okay, so that was just a question from Eugenia.
Very, very young, very early.
Yeah.
Thank you for that. I think Ghana prides itself as being the first, but I have to check that. But you're right. The point that I'm making is exactly that. You have young financial markets that have yet to be developed. Yeah. And they are on the cusp of doing that. And some of the conversation is, you know, do they go blockchain first, right? Do they just leapfrog instead of doing an ACH and database system that everyone else is moving away from? If you're Liberia and if you're another country, do you go CBDC or do you go blockchain or do you really go back to Web 1, right, to build your switch?
Wow, that's a good question. There's another question about XLM and XRP. XLM,
yeah.
So that's from Jackie.
Not investment advice. I don't hold XRP. I was gifted XLM a long time ago. I still have it. It really depends. I'll answer the question that way, like I answer, you know, my friends and family, right? So I got my mom into Bitcoin. I got my friends into Bitcoin, kind of little, you know, via WhatsApp, told them to download an app and kind of get it $20 in, and so they can try it out and test it out. Because I believe it is a class of asset that everyone, especially minorities, especially people of color, really should get educated about and knowledgeable about. There is an amazing opportunity on wealth creation, on asset appreciation, on store of value. It's not a stable store of value, but it, you know, some assets have store of value. My number one rule is when you're looking at a token, try to understand, if you're not speculating is just whatever, right? Like throw money at all of it and then see what sticks, but don't, you know, make sure you have your rent money. You know, don't throw all your savings and things like that. But speculation is a different game. But if you're really trying to invest in a more informed way, pick a token, understand what it does, understand what it is used for, what its utilization really is. Don't believe the headlines all the time that transactions are happening and this and that. You have seen a lot of, you know, kind of uncovering of things that were not happening. That's, you know, the players were telling you that things were happening. So that's the only thing I would say. XRP is, you know, I think it outside of the US is doing something, but the US still definitely has a wet blanket over that. And then XLM is for Stellar. And again, from a protocol perspective, see how they're growing and see if you see a viable future for the token. That's one way. This is just a framework on how to think about investing in crypto. Excellent.
Okay. I know we've run out of time, and you know, our workshops go on for an hour and a half, 2 hours, because it's such a wonderful subject we have here. Maybe one day we could do part 2. But thank you, Carmelle. I really appreciate that you've given us.
Thank you very much for having me.
Yeah, it's all right. We love it. And guys, you can unmute your mic. Just show your appreciation. That'd be great. If you can do that.
Thank you very much.
Yeah, I'm actually at
work. Have fun. Continue to have fun.
I'm actually at work, so I missed quite a lot of that. So Christian's gonna have to send me the link.
Yeah, we'll do.
Thanks, Carmelle. That was brilliant. Thanks a lot.
Oh, thank you very much. Good night, guys. Stay in touch.
Okay.
Part two. I
don't know. We always, I think Carmelle's very busy, but we appreciate you.
Thank you.
Good night.